Reasons for silver boom in 1979. In the world of investing, few stories are as dramatic as the silver boom of 1979. It was a time when fear, speculation, and ambition collided, sending silver prices soaring nearly 700% in just 1 year, before crashing spectacularly. In this video, we'll explore the full story: what caused the boom, who drove it, why it all came crashing down, and what is the difference between 1979 and 2025 silver surge. To understand why silver boomed in 1979, we need to rewind to the date when President Nixon ended the gold standard, serving the link between the US dollar and gold. This move triggered a wave of uncertainty, and inflation in US reaching double digits during late 1970s raised the fear among investors about the fiat currencies, which leads to rise in commodity like gold and silver. The Hunt brothers. Nelson Bunker Hunt and William Herbert Hunt were Texas oil tycoons with a deep distrust of fiat currency and a bold vision to corner the silver market. They believed that inflation would destroy the dollar, and that to protect wealth, one must invest in assets that are in high demand but limited in supply. In 1979, they identified silver as the ideal candidate, widely used, increasingly scarce, and undervalued. Their buying spree wasn't just about safeguarding their fortune, it was about control. The Hunt brothers set out to dominate the silver market, and they had the capital to do it. The price surge. As the Hunt brothers accumulated silver, prices began to rise. But it wasn't just their buying that drove the boom, it was the psychology of the market. Silver surged from around $6 per ounce to nearly $50 per ounce, increasing by 713% in less than 6 months. By January 1980, silver had reached its all-time high. It became the talk of Wall Street, cheaper than gold, accessible to small investors, and rising rapidly. The gold-silver ratio dropped to historic lows, fueling speculation that silver was deeply undervalued. Silver was so attractive. Silver wasn't just a hedge, it was a speculative dream. Industrial demand for silver was strong, used in photography and jewelry. It was seen as a poor man's gold, affordable, tangible, and inflation-resistant. Futures contracts allowed traders to control large amounts of silver with small upfront capital. The combination of economic fear, speculative leverage, and aggressive buying created a perfect storm. Silver was no longer just a metal, it was a mania. Silver Thursday. But every boom has its bust. And for silver, the crash came swiftly and brutally. On March 27, 1980, COMEX, the commodity exchange, changed its rules by increasing margin requirements from 10% to 40% and limiting the size of contracts. The Hunt brothers, who were the primary drivers of the rally and had accumulated nearly 1/3 of the global silver supply, couldn't meet their margin calls. Panic set in. The very tools that had fueled the boom, leverage and futures, became instruments of destruction. The market simply couldn't sustain the weight of speculation. Aftermath. The fallout was severe. The Hunt brothers faced lawsuits, investigations, and financial ruin. They eventually filed for bankruptcy. Silver plummeted from $50 to just $5 per ounce, wiping out nearly 90% of investors' wealth within months. The metal then entered a multi-decade slump, rarely crossing $10 for the next 20 years. This dramatic collapse led to tighter regulations in commodity markets, particularly around position limits and margin requirements. Difference between 1979 and 2025 silver boom. In 1979, silver's boom was driven by fear and ambition, two oil tycoons trying to corner the market. In 2025, it's driven by fundamentals, rising demand from green industries, supply shortages, and a global shift away from the dollar. While the price may look similar, the story behind it is entirely different. If you're into investing and financial education, Don't forget to hit that subscribe button for more content that keeps it clear and data-driven in the real money.